Good afternoon, everybody. We're going to go over our Forex trades for today, Thursday, May 7th. Not much economic data to speak about this morning. There was the weekly jobless claims. That comes out every week, so you can't put that much emphasis behind it. Although tomorrow we do get non-farm payroll, obviously the biggest number of every month. Non-farm payroll, unemployment numbers. So they come out here in the States 8:30 a.m. Eastern Standard Time. So we'll see what that brings about. Obviously, going to be a big influence on the Fed on what they do next. And as you know, we've been saying the economy is incredibly weak. That the Fed has painted themselves in a corner, and they want to raise rates, but they won't admit they have to raise rates just to normalize them to basically stop the financial engineering, basically create good debt rather than bad debt, and create good inflation rather than any bad inflation that it's created. And there's a big difference in that. And we've talked about those in the past. But they won't admit that that's what they want to do. So they're trying to say that the economy is growing strong enough to justify raising rates. But in fact, we all know that's not the case. First quarter GDP came in at a miserable 0.2% growth for the entire first quarter. And now for the second quarter, GDP growth, analysts are actually down by 0, or some of them are as much as a negative 0.5% growth. And then the trade balance that came in the other day, I think Tuesday, I believe it was absolutely miserable. Biggest miss ever. We were in a trade deficit of over $50 billion for the month. And once those numbers came out, within an hour or two, analysts were downgrading the U.S. economy as far as the GDP. They were lowering their GDP forecast. So not looking good for the Fed. Curious to see what they're going to do. As far as we're concerned, we had 2 trades, pulled out 11.8 pips. It was a correlation trade. Just this, we haven't really been seeing good scalping opportunities, and when we do see them materializing, there's an economic data being released. There was one materializing this morning, but there was the employment data coming out at 8:30. And yes, it's a weekly number, and it's like a medium type volatility number, but we don't get in the scalps just ahead of a number. 15-20 minutes after, fine. But by the time it happened, it was too late. So we haven't done much scalping at all, and much swing trading. Just haven't been seeing the setups that we like. So we will remain disciplined and continue to do what we do. We did have this correlation trade, as you see here, between the U.S. Canadian dollar and the U.S. dollar to the to the Japanese yen, and you can see the comments here. But the spread was currently about 600 pips. The widest in the past year, the spread had been at about 1,200 pips. So we went in with, now on these things we do 50% to 60% of our normal size. That's our intended position size. And then we'll piece into it, usually in halves. But since this was only 600 pips compared to a spread of 1,200, we went in with 25% of our intended position size. Figuring if it widens, we can slowly work our way in over the next, if it was to drop another, say, 500 or 600 pips from here. But in fact, that's not what happened, and it started to pop maybe 6 or 8 hours after we put the position on, and we ended up closing for about 79 pips or so on the profit side. But adjust that for size, it's about 11.8 pips. And we'll show you the trades that we did. Here, the U.S. dollar, Canadian dollar, we were long 1.19800. And you can see as she ran up to the half figure, that's where we sold out. 1.20495. Picked up 69.5 pips, adjusted for size, 10.25 pips. And then the U.S. dollar, Japanese yen, we were short this 119.419. And we covered 119.323, picking up 9.6 pips on that trade, or size adjusted 1.4. As you know from correlation trades, they don't happen every day, but lately with the volatility being pretty high, we've been getting more opportunities. And sometimes one trade makes works out and one trade doesn't. As long as the one that makes out is more than the one that doesn't, you're going to be profitable. And if it's not happening while you're in it, you just wait them out. And that's why we don't use a lot of leverage. That's why we don't mind holding these things. Now we are in one currently, Australian dollar to New Zealand dollar combined with the Australian dollar to US dollar. We're long the Australian dollar, US dollar, and we're short Australian dollar, New Zealand dollar. So that is we're down about 50 pips or so on that trade. Size adjusted, we have about 30%, so we're down about 15. So well within our range of losing, although we have no intentions of taking it off at any point rather soon, because that spread we believe will narrow, and if it widens more, we'll continue to put on a position because we have some room there. So that's it. We're going to wrap it up. So we'll take those two trades. We'll take the 11.8 pips, and we'll move on. If any signals come out the rest of today, they'll be going out. If you're trading now, good luck, and we'll be back tomorrow, assuming we get some action, or if we close out the other correlation trade that we were just speaking about. If not, if nothing happens really, then we won't do a video. And have a great weekend. All right, we'll see you. Like I said, we'll see you tomorrow, assuming we get some action. Have a great day.